For the week ending 1st August 2025, the Sensex slipped by 586 points to close at 80,600, while Nifty fell by 203 points to close at 24,565 points. Despite brief gains earlier in July, markets remain under persistent pressure due to foreign investors selling, global trade tensions, and end of U.S Tariff's grace period, which reignited the concerns of export-driven sectors. Welcome to Signal, where noisy markets meet simple, sharp, and sound insights for long-term investors. Let's have a look at markets highlights of last week. FMCG sector held strongly, led by Hindustan Lever's 5.66% gain. Healthcare lagged and declined by 3.4% due to pharma's weakness. Mid-caps slipped and small caps showed resilience by modest gain. While we witnessed brief gain earlier in July, expiration of U.S tariffs have added cautious tone. But this is a reminder for long-term investors that short-term volatility or a dip is natural and potentially an opportunity if approached systematically. Do you see this dip as an opportunity or risk? Please do let me know in comments. Now let's have a quick look at mutual funds. AMFI's data of June 2025 suggests SIP inflows of 27,269 crore, which is up by 2% compared to May 2025. 8.64 crore subscribers were recorded. This is 900 crore on a daily basis, underscoring the strength of retail investor. Equity inflows totaled 23,587 crore, driven by flexi and small cap. Hybrid funds, especially arbitrage and conservative categories, also showed stronger inflows. But more than the numbers, this is reflective of organically growing confidence in systematic investing across the board. May I please ask, which mutual fund did you add in July? Equity, debt, or hybrid? Now let's look at strategy of the week. Does short-term dip concern you? If it does, you may want to consider hybrid funds. Hybrid funds are perfect blend of equity's growth and debt's stability, allowing you to remain invested in stressful ups and downs. It's not about avoiding risk. It's about managing risk, and hybrids allow the investors to remain invested despite market's volatility. Now let's hear the story of the week. Ujjwal and Riya gave birth to their beautiful daughter Shreya in January 2020. They wanted to establish a long-term savings plan for Shreya so that when she turns 21, they receive a large corpus or lump sum. In a recent review, it was identified that Shreya's portfolio has more than doubled since inception. Of course, they will remain invested until Shreya turns 21. But this reminded me of timeless quote from Warren Buffett. The stock markets are designed to transfer money from the impatient to the patient. Now that brings us to the wrap up of Signal episode 1 by HP Private Wealth Advisory. In next episode, let's decode RBI policy decision and what it means for debt funds. We are building a strong community of long-term disciplined investors. Why not like and subscribe us and tell us in comment how long is your long term? 3 years, 5 years, 7 years or 10 years and above?